we were originally supposed to have Mike Jones, founder of Science and Science Blockchain, as a keynote, and unfortunately he had something that came up. He's quite apologetic that he wasn't able to make it. But we still have we have a great new addition from the Ethereum Classic incubator that was recently announced, and I think we've got a pretty good cross-section of how incubation happens in this space. You know, obviously going back to the first, I'm trying to think who the first incubator would be in the space. It would be Omni probably, right?
It wasn't Boost or anything.
Well, I guess we'll all think about this. My background, I go back to the .com days, and I like to sort of look at what happened there and then look at what's happening now. And I was actually Jeremy Gardner, who's going to be up a little bit later. We were debating whether, you know, I originally was telling people that in 2013 that you could sort of just subtract 20 years and count forward. So 2013 was like 1993, and so, you know, you'd basically have the .com frenzy by 2020. Might still happen, but you know, obviously 2017 was a big year, whereas I think in the .coms, 1997 was kind of like a little panic because of larger market conditions around long-term capital, hedge fund, and Brazilian currency crisis and some Russian things. And so obviously you're never able to predict what the macro economy does. You know, I think we'll probably mention a few times during this next 3 days about you know, what you know, the Bank of Italy and what you know, the Bank of Japan and some of these other powder kegs are going to do to the price of cryptocurrency. But the first incubators in the crypto, or sorry, in the internet space, and the web didn't start until 1991. Jeremy had mentioned that you know, he looks at the whole space as really the web starting, and well, we'll save this for our fireside chat. But at any rate, the first incubators in the 90s were both actually you know, had ties into Los Angeles. Bill Gross with Idea Lab did a phenomenal job of just sort of sitting on the beach, coming with a whole bunch of his ideas, and then hiring people to go and build them. And I think he's 120 companies in now, and you know, some of them became very big. They spun off then a venture fund that was the highest returning venture fund of all time. It's called Clearstone now, but it was called Idea Lab Venture Partners. And then the other one was the America Online Greenhouse, which I was fortunate enough to launch with my first PR firm, the Terpin Group. So incubating in this space in a decentralized, tokenized manner takes all sorts of forms. Jim Blasko is my co-founder at B-Commerce Labs, which we started in 2015 to incubate our own ideas. Most of the incubators and accelerators, I'd say, are more of the acceleration mode. And I guess that would probably include both Bunker and ETC, where you're more Y Combinator than Idea Lab. So I'm going to start with Jim and just work our way down and give a little you know, summary of what you've done in the incubation space and sort of where you see you know, kind of incubated projects going in the next couple of years. Jim.
Thank you, Michael. I believe with this field, you know, you're gonna fail sometimes, and sometimes you're not. And like you said, 120 companies, they definitely all didn't go, did they? So one of the experiences in this field that I can bring is that, you know, we have succeeded, but we've also failed sometimes. We started with I think Crypto Market was our first incubator, and that was it's a great Incubating. It was a great idea, and it still is. It's slow to catch on. eBay was slow to catch on at first too, but what we did was built a version of eBay for cryptocurrency that ran off of Bitcoin and Litecoin and a couple other cryptocurrencies. The unfortunate thing was it really didn't take off the way we thought it would. We haven't given up on it, and over time we do believe it'll come back and do better and be more of something that we expect it to be as the future rolls on. Crypto's still very, very early, and as you started to touch on, but we'll touch on more on the fire chat, is that it is kind of like the rebirth of the internet, as some people call it, the internet of money. So we are seeing that, but with those experiences come the next projects that you work on. We're working on another project now called Aspire. Aspire is a platform much like Ethereum or Counterparty. It allows people to build smart contracts on a smart contract platform. It's very easy to use. It uses a 51% unattackable chain, which is another problem we've seen. As crypto goes along, we've, even Unbreakable Coin is a cryptocurrency that I made with technology that is now kind of outdated. As times go on, we're learning how to build better cryptos. It says, "Make crypto great again" on my hat. And it doesn't mean that crypto has gone bad. It just means that we're making it better. You know, we're always improving it. We're always making cryptocurrencies better and its technology around it. As also, I think that things need to become a little easier. I think the major population is still afraid of cryptocurrency as they look at it. So we take these ideas, we incubate them, we get them growing. No matter if they fail or they don't, at least we're moving the chain along, to say, where we're getting closer towards a better product and a better service for everybody out there. And we've seen a lot of great ones so far.
Hi, everybody. My name is Paige Freeman. How this industry has changed. I got in with the founding team of BitPay, so my first entrance into this space was payments. Fast forward a little bit along, I got into ICOs, and over the past couple of years, I helped companies like Token Card and Funfair raise millions of dollars for their projects. Right now, I am, and for a while, co-founder and co-CEO of Bunker Capital. We're an advisory firm, consulting firm. We've been in the space for many years. We work on different things from mining to helping establish companies with their blockchain solutions. So I would say, you know, even on the ride over here, there was somebody, the cab guy was talking about ICOs and scams and all of that, and we are making crypto better than before, I guess, perhaps. But bottom line is that my whole thing is that I want to help companies succeed, and so just like the previous panelist, he said, think about your customers. I think many people in Silicon Valley and these incubators, they come up with great ideas. They've never run a company before. They don't know how to they don't know how to generate revenue necessarily, and it's not going to make people happy. So yes, we're going to continue to go through this wave of these you know, ICOs that didn't work out. However, we are going to continue, and competition is great, and the best will survive. And I think we're seeing that right now. Some people are getting out of the space when they shouldn't be. This is the time to really buckle up and take it to the next level.
Hi folks, so my entryway into blockchain, I started getting really excited maybe only 2 years ago, but started diving in maybe 4. But 2 years ago when utility tokens really started taking off is where I became really interested, and the ability for people to own their own data, or at least the idea of being able to monetize on their own data. So that's where I became interested. I was at Plug and Play Tech Center before Ethereum Classic Labs, and just joined ETC Labs 2 months ago. And as was mentioned, yeah, we're more like a YC than we are an incubator, so to speak. However, we are diversifying who we invite into the lab, and we are looking for some teams that are pretty early stage as well, at the idea stage. So I'd say 80% is more on a team of, say, 10 with an MVP in place and already a POC in the market. So similar to Paige, we are looking to help teams build and grow and find resources for them to be successful, and we see the space really similar to most other startups by adding the blockchain layer.
So Plug and Play made people come to San Francisco. Are you more distributed, or do you have it in one place?
Great question. So we're in San Francisco. We're on Powell, just off Powell Market. We're also opening a location in Singapore next year. And our parent company, Digital Finance Group, different than DCG, Digital Capital Group, although we're friends, is based in Shanghai. We have a pretty big team out there, and that's a traditional, that's a blockchain-focused fund with the parent company that does more traditional investment.
And if somebody in Chicago wants to do something, do they come to San Francisco, or do you sort of let them keep teams there, or how does the process work?
Yeah, so we're asking teams to join at a 50% rate. So if that means they come in for 2 weeks and then go home to Chicago, to Los Angeles, to Hong Kong, wherever that may be, that's totally fine. But we will do weekly dinners, we will do workshops and meetups, and we are trying to build a community in San Francisco. So we want folks to come out, not just come in and take some money and give us a phone call every once in a while, and we do want them to come out half of the time.
The ETC Combinator.
ETC Combinator. That's right.
Great. And then Paige, how does your process work?
Okay, so as I said, we have many different types of projects, but the main focus that has changed for me at Bunker as opposed to New Alchemy is that New Alchemy was about having somebody with an idea, with maybe a white paper, helping them with token customization, doing the marketing around it, leading them up to launch date, and then saying good luck. This time, it's a little different. Regulation has come into play, and there are companies that want to get into the space, and they have a lot to lose. So they're not going to just go out there and have a token and not think about jurisdictions or how it's going to affect their current business. So we're very selective in who we work with. There are some projects I'd love to talk about that I'm not able to because attorneys say not to. But bottom line is that it's diverse. It could be a real estate project perhaps or something along those lines. And it's proven teams that have an idea of building communities. So it's much more than just raising money for maybe a product that might work in the future. It's let's do this. We already have a user base and we're going to grow upon that. So it's really exciting. And as far as screening people, we haven't put anything into marketing yet, and we need some assistance with PR, which Michael and I are going to be talking about here shortly, off panel. But truly, we haven't been out there trying to bring in business. We've been fortunate to have it just because we are people who have been in the space for a while, as opposed to others who say that they can do ICOs and things like that, and they're really not too knowledgeable or even care about regulation as much as we do at Bunker.
Yeah, we've seen a lot of the ICOs pop up in the last year that haven't done well, and it's nice to see that there's a company out there that will help you lead you through your ICO way, if what I'm understanding is right. And then, yeah, legally. One of the things what we're going to try to do with Aspire is we're not going to basically help people with their ICOs, but as you've seen with Ethereum, where people are running their ICOs through a smart contract on the Ethereum platform, we're going to do that same thing, but what we're going to do is take another step where you say, recognize your customers. We want to do the same thing. We want to recognize and we want to help our customers. So once they've gone through their smart contract phase, they've done their ICO, they've raised their funds, we want to see about getting people onto their own blockchains. And something that we've done for a few years now is build blockchains for companies, very strong blockchains that work great. And if a company is really serious in this industry about blockchain, they should have their own. They shouldn't run on another's platform like Ethereum or even Aspire. It's okay to do that, I think, for their ICO portion with the smart contract, but if they're really serious, they should have their own blockchain so that they can do whatever they like with it later.
And also, one of the key differentiators of Aspire and other tokens that are have launched and are launching is you're able in the initial phase of Aspire development to be able to go and let someone take something they would do on ERC20 or on Ethereum Classic and do it on a counterparty like structure, which then also runs the EVM, runs ERC20, runs emulates all of that.
Yeah, it's completely
but with almost no gas fee.
Yeah, it's beautiful because we've made it to where it's basically free to use Aspire. One of the GASP coins will allow for so many transactions, thousands of transactions. So it's almost a feeless network. So that is a beautiful thing. And anybody who's used a standard ERC20 or any other ERC contract, they can launch that on our platform as well. We're compatible. We use the same type code.
So I've noticed in the last year, really started about a year and a half ago with the SEC letter about the DAO. It was interesting that the DAO clearly broke the Howey test and had exchanges involved, and it was almost too big to prosecute. But they gave that as a warning letter to everyone and saying, don't be a security. And I don't think anybody doubts that the DAO was a security because it said, hey, give us your ether and we're going to go and incubate companies. Really, that was sort of one of the early incubators, I guess you could say, even though it failed miserably. Not only did it break laws in the way it structured itself, but it also, if code is law, they broke that law too because they let someone run away with $60 million and hence Ethereum Classic was born.
Yeah, the rollback and the
But
fork.
since then, there's been sort of there's 5 members of the SEC. There have been not a single regulation proposed. There hasn't been a single hearing about proposed regulations. There have been congressional hearings saying, what is all this stuff? But, and it's really unusual, in fact, almost unique for the SEC to have an asset class that it goes this long with just simply statements at conferences. And so what's happened in the last few weeks is, a lobbying group that was working with Ripple got 15 congressmen from both parties to basically tell Jay Clayton, we're not giving you a deadline, but you can't just govern by enforcement actions alone. We need to have some clarity. And I would say there's a chill because there hasn't been any clarity. Silicon Valley, which historically should be running this space, right? They have great minds, they've got great projects, and yet every single project that has wanted to spin out from a really top team that I've talked to, they'll get all real passionate, they'll call me, say, hey, I want to do this and that, what do you think? And be an advisor and this and that, and then all of a sudden they say, can you talk to Wilson Sonsini? And then all of a sudden, they just, I think we're just going to raise a venture round. It's illegal to do an ICO. And of course it's not, but the laws are so mixed and unclear, and 15 different interpretations of the Howey test, which should be pretty clear, that it really has been this giant sucking sound of all the talent out of Silicon Valley and throwing it to Malta or to the Caribbean.
Or Puerto Rico.
Well, Puerto Rico is still part of the United States. Puerto Rico does not have, we'll address this at lunch, they do not have a Wyoming. All that Puerto Rico has is that if you're starting a company, you can have, and the structure for many companies now with this in mind is to have your for-profit entity that raises your venture fund, the funding, does a safe note, whatever, be based in Puerto Rico because you can do a software as a services, own your IP there, and then do your token sale outside of Puerto Rico in some place like Caymans. Because when you go, and I know Leo will be here later. I think he must have missed his plane or something because he was supposed to be on the first session, and we'll talk a little bit about it in the legal panel at the end of the day. But as of January 1st this year, you can't just go and raise money as a U.S. citizen and kind of keep it over there. You raise money by selling tokens and not giving up equity as utility tokens or products. All of a sudden, you raise $10 million and you do it in California. you owe 51% of that, roughly, back to
the United States, 51% attack.
It's the United States, very good, 51% attack. And even in Wyoming, which has their Utility Token Act, and you don't pay any state tax, and they say you're not, they brand you as not a security and exempt from securities laws in Wyoming, and Caitlin Long, who really was the founder of that whole movement, will be here tomorrow discussing that. But what's happening is that you're having basically it would be half tax, and if it's 4% tax in Puerto Rico, then it'll be 2 when stuff's coming to the Cayman. But we'll talk about that at lunch. But this giant sucking sound is either just taking the ICOs and throwing them offshore, or even worse, just simply they just say, never mind, go raise my next venture round. I'm going to give up on this.
It's slowing the growing process. Yeah. Because we're ready to work with the regulators, we're ready to work with the government, but they're not giving us the fine line and saying, here's what everything is. They're not laying down the law.
So my question is, I have 3 words: no action letter. Does anybody see this happening from the SEC regarding utility tokens? There's active discussions within the next year, and how would that change your space if the SEC said, here's a no action letter, if you do this, this, and this, you are a utility token, you're exempt from securities laws. If you don't, then you're security. Paige.
I don't see that happening. My main.
We'll never have a no action letter. Never.
No. I'm just saying that when it comes to regulation, just back to your initial point, right now, so many companies the technology innovation is being suppressed because we don't know the answers. So we're spending all of this money on law firms, which you and I have discussed about. People have great ideas and they go talk to these law firms, and then the law firms take them down a path that's going to make them more money as opposed to another option that would be much less, and they're just not going to provide that detail. So when you're saying this so your question is the SEC going to give us guidelines that say that this
And
is
what
a
would
utility?
that, and what would that mean for your, so let's assume that there will be some clarity within the next year. What would that do for your business?
Well, I think any clarity is going to be great. It's absolutely going to be great because right now I would say if you're going to have a utility token, you do it outside of the United States. So like I said, if we get that clarity, we will abide by that. But until that happens, as I keep saying, I see companies with these great ideas and they're just not able to move forward. They're too afraid. It's a Silicon Valley thing again. On the other hand, it is good that countries all over the world are getting involved in this space. So you can see the positive side of that as well, that it's not just, you don't have to move to San Francisco. It's okay if you do. I've lived there. I love it. But no, you don't. It's more of a global thing. And so if we have to go outside the United States, which isn't ideal, at least it's expanding globally in a positive direction.
I think for Ethereum Classic Labs, bringing me in, I'm a little bit more of a traditionalist, not a purist, so I'm kind of in the middle of the road. The agreement that we're striking with the majority of our companies is a rate agreement, so we're doing a mix of equity and tokens. We're not doing fully tokens, one. And then two, we're running a pilot right now, so we have 6 companies we're working with to have AR collectible solutions. One's an AI IT solution for running queries. Another's a supply chain platform. And so what I'm trying to say is that most of them actually have a business model that won't break if blockchain breaks. And I think it's wise. We only have one right now that's a wallet solution that would definitely be harmed.
Now, I think it's smart to have both equity and token interests in a blockchain company. I mean, you know, up until really the last few months, the thought was, oh, well, the first couple of years was like, oh, we're decentralized. Who needs a company? We'll just simply be a DAO. And then, of course, the SEC basically said, well, if your DAO is a security, you can't say you're decentralized because basically, if there's a person who acted on it, we're going to hold you personally responsible. There's no such thing as decentralization when it comes to securities laws. That kind of like killed off the concept of like, hey, we're just all free floating, and unless you're really Satoshi and you can't be found, you know, if you're associated with a project, you have to, you know, sort of abide by the rules of the securities laws, which the biggest problem is that they haven't been very clear. But I think the other thing that has really sort of moved people into the direction of saying we want a little bit of each as an investor is governance. Because unfortunately last year, you know, first of all, that article that came out that said 86% were scams was complete fake news. What they did was they actually looked, if you read the entire thing, they looked at the Twitter accounts of different ICOs, and if they had stopped tweeting, they assumed that they ran away with the money and it was a scam. Many companies stopped tweeting after their ICOs. They're busy building their product. Does not mean that they ran away. However, I think that what's happening is that there certainly were projects that turned their funding into lifestyle businesses, right? And so that's why you have a board. I mean, you don't want to go and give someone if you're an angel investor in an equity play, you don't want to give somebody $1 million and then never have a board meeting and say, how's it going? Oh, it's going fine. I think I'll get around to building something someday, right? And that's kind of what happened with token foundations, is many of them really didn't have any kind of outside governance. And if it's not, you know, a structure like a true foundation, like an Ethereum, like an infrastructure company, and you're a for-profit that then is tokenizing part of your business, it makes sense to have a voice in both of the areas to make sure that from the token holder perspective, all the value is not going to the for-profit company, and from the equity perspective, that the money raised by the tokens isn't just buying Lambos.
I just have a follow-up question to what you said in the very beginning about the media, because I get this all the time about ICOs being scams. So aside from people maybe knowing you or me or anyone on this panel and asking us what to invest in, the news is terrible out there. I've known this since BitPay days. They would twist things around and say that it was awful. It was just not accurate information. So what would you tell to anybody in a group setting as far as how do they know what to invest in, which companies to believe in? You look at their teams, obviously. You look at that. You read the white paper if you have time. It's very lengthy usually. But where would you go for your best information?
Well, like Jim Cramer says, for stocks, you have to do your research, right? I mean, you don't just throw dartboards up. I mean, if you want to do that, you just go and invest in, you know, S&P index fund, and just if you think that the S&P is going to still keep going up, just buy an index fund. If you think it's going to go down, they have all sorts of ETFs for shorting. But you have to do your homework with any investment, or else you might as well just go into the casino here and start putting money on red or black. And I think that obviously conferences like this are a good place to be able to meet the thought leaders and see the pitches of the new companies that are out there doing interesting things. We over the last year and a half had about $500 million that were raised from companies that presented here. Our first Puerto Rico event in February of 2017, it was only I think 90 people, but it's where Quantum launched. It's where Bancor launched. They raised $153 million on their own, and Matchpool, which when they raised their, I think it was $7 or $8 million, they got a new CTO, and the old CTO basically said, "I think the founders run away with the money." And literally, it went like wildfire, and everybody believed it because, of course he ran away with the money. He did no such thing. He simply fired one CTO and brought another one in. We had to do all this crisis work just to be able to, because we're doing PR for them, just to be able to show that he's like, should I give the money back? It's like, you didn't do anything. show the wallets where it's at. I mean, he literally, at one point, what he did do, and he told everybody in a Medium thing that he was going to do it, was he sold some of the Bitcoin or some of the Ethereum and put it into Bitcoin because he wanted to sort of like keep a balance, right? And he literally had a 24-hour camera on the trousers just to show that they were still there. I mean, it was crazy, right? So we've gone from this sort of opinion that everything's going to be a scam to, obviously I think that better ICO governance, we're going to discuss that on the third day with Miko and some other folks, is something that is just, we started as an industry of transparency, and so I think we just have to keep that transparency, just tell everybody in your community what you're doing, and then there's not questions.
And then also, I guess, with branding for incubators, just like with a Y Combinator and with Boost VC, you'd have an extra feeling of maybe these projects have been assessed as opposed to just being the match pool, which match pool is fine. I remember those guys. So anyway, like for you, I would think that you're concerned about branding. And how long has ETC Labs been around again? Because I can't recall. 2 months. 2 months. Okay.
Yeah.
So I'll just leave it.
Yeah, I guess for sourcing, is that the question?
Well, just branding, like becoming the place.
Oh, okay. So for
premier incubator.
So for Ethereum Classic, our interests are, of course, helping move ETC forward. So that's getting wallets onto the space, it's getting testnets onto the space, it's deployment frameworks. But then from an application perspective, we're interested in IoT and health data and loans and record verification. So for us, I guess that's kind of the brand, but we're also, we're not big fans of governance. We are focused on decentralization and immutability. So for us, it's really important that we don't want to govern in any way, shape, or form, and we do have the same, a very similar perspective as Bitcoin in that you can only have 30% ownership of tokens, and that's the cap. So trying to keep it as decentralized as possible.
Great. So I'm going to turn over the floor to questions in the audience. Just got a question over there from. Oh, I'm sorry.
It's okay.
Got a couple questions in the audience.
Great presentation, thanks guys.
And also, if you say who you are and then ask the question.
Sure.
I know
My
who you
name's
are, but
Alex.
everybody
I
does.
run Bicameral Ventures, a crypto fund out of Toronto. Just a quick question on the build your own blockchain versus building on top of somebody else's platform. And I guess I understand the sentiment of you own your own tech stack, but aren't we getting to the point where it should become part of kind of a best-in-class tech stack, and you can pick and choose what is already out there, what's available, and focus a layer up, or focus a couple layers up on what's actually the outside solution or what's the end solution? Just curious as to your thought on what's kind of the logic behind every project must have their own blockchain.
Well, I don't think every project necessarily has to have their own blockchain. I think if they want it to be a part of their company and be serious about it, they should have their own blockchain. I don't think they should be a layer on top of somebody else's platform. I think that's okay to get launched, you know, a good way. And we've seen it work for a lot of companies that did ICOs using Ethereum. It worked great. But then when something like CryptoKitties comes out and it drags Ethereum down to almost a halt, all those other assets that are on top of that platform are pretty much screwed. They just sit there and they can't really be used. So I don't think it's fair to their users for unforeseen things like this to happen. You know, for another platform to launch or another asset to launch on that platform that would cause theirs to slow or stop. So I guess that's my thinking there.
I was going to say, and Bicameral, of course, is spun off of Aon, which raised their tokens in ERC20, is now launching their own blockchain, but that was right from the beginning, and I think ERC20 has simply become the easy, convenient way to say, oh, it's one of its main use cases right now, other than CryptoKitties, is, you know, sort of launching token sales. Question over there. And again, say who you are and your question.
Yeah. Hi, Mike Winston, Private Jet Coin. So this is sort of a nuanced legal question, and you don't have to have an answer. We have a lawyer for that, but I kind of wanted to understand how others might be addressing this. So the question is, if you do a utility token in the US and you constrain it to qualified investors only, let's say under Reg D, you've arguably sold a security, and then at the end of a year, if you read the regulation, anybody can trade it. It's off restriction, by my understanding. How do you think about that relative to just doing an ICO in Europe and Asia?
So I'll take a shot at it. I'm not an attorney, but I talk to so many of them that most attorneys say, you really should go to law school and get into this space. But no, I mean, basically, I would say there's 3 types of tokens right now prior to the new no action letter coming out. There's a utility token that I think is properly defined in Wyoming. There's a security token where you're actually giving up equity or paying a dividend. It would be a security if it wasn't a token. And then there's what I refer to as the chicken shit tokens. And those are the ones that basically some lawyers said they should be a security when they actually have no hallmarks of being a security. So my recommendation, and I usually steer people to lawyers who will follow this, is that again, you end up having, the only security you should be offering is your company. That is a security. A venture-funded company is a security. You go and do a safe note, you go and raise whatever you need to sort of get your token incubated and to the point of either functionality or at least where you're feeling comfortable with your community, that you then launch it offshore. And you know, there's plenty of experts here who will tell you which jurisdiction that should be in until there's a no action letter. When there's a no action letter, then you have onshore as an alternative. But no, I think that doing a Reg D and limiting it to accredited investors and sort of like pretending you're a security when you're not is the wrong path, and many lawyers agree with that. You simply do a token purchase agreement because you're selling something. It's not a security. If you want to go and restrict it to, well, again, if you're blocking the United States, accredited investors is meaningless. You should KYC who's buying your token for other reasons. One more question? Okay, thanks to our panelists. And I will stay right here and I will bring up Jeremy.
Next, we have the fireside chat with Michael and Jeremy Gardner.